You've heard about it, right? The stock market. It's everywhere. But let's be honest, it can feel super complicated, kind of intimidating. So what we're going to do today is cut through all that noise. We're going to get right down to the simple, core idea of what it's all about. Yeah, you see those numbers flashing on the screen, right? The little green and red arrows. You hear people talking about it, but what is actually happening behind the scenes? Well, that's what we're here for. We're going to break it all down, and it's simpler than you think. Okay, so first things first. To really wrap our heads around this, let's just forget all the crazy charts, all the jargon, all the people yelling on TV. Just for a minute, let's focus on the one big central idea that makes the whole thing tick. And here it is. That's it. The stock market is just a place where people buy and sell ownership of companies. Think of it like a giant farmer's market, but instead of apples and oranges, people are trading tiny little pieces of actual businesses. And that word ownership, that is the absolute key to understanding everything. Okay, so if we're trading ownership, what does that even mean? What does it look like? To get that, we need to zoom in a little bit and look at the basic building block of this whole system. Right, I mean, why would a company even want to sell little pieces of itself? Well, the answer is pretty simple, actually. It's all about growth. So picture this. You have a really popular local coffee shop, and they want to open a bunch of new locations. Or maybe a tech startup has this game-changing idea for a new gadget. To do any of that, they need money, a lot of it. And this is how they get that money. What they do is they take the entire company and slice it up into millions of tiny identical pieces. And each one of those little slices, that's called a share. So when you go and buy just one share, you are literally becoming a tiny owner of that whole business. So that's the whole process right there. In a nutshell, you've got a company that needs cash to get bigger and better, so it sells these little pieces, these shares, to the public. You decide to buy one, and boom, just like that, you're a part owner. It's a direct connection, you know? Your money is now tied to that company's future success. All right, so now we know you can buy a tiny piece of a company. Cool. But that brings up the next obvious question, right? Why are the prices always changing? Why doesn't a share just cost, I don't know, $10 forever? This is what makes the market move. Let's just think about it logically for a second. Let's go back to that coffee shop, the one that wanted to expand. What happens if their plan actually works? I mean, really works. They open up new shops, they're packed, people love the coffee, and they are making way more money than they used to. The whole business itself is just more valuable now. And this is where it all comes down to basic human nature. When a company is crushing it, when it's successful, other people see that, and they want in. They want a piece of that success. So suddenly, more and more people want to become owners, and that demand for those little pieces of ownership just skyrockets. And this is just a basic rule of how things work. You see it everywhere. Think about it. The hottest new sneakers or front row tickets to a huge concert. There's only so many of them, and everybody wants one. What happens to the price? It goes up, right? It's the exact same idea with a company's shares. Simple supply and demand. So that brings this whole thing back to you, the person who bought the share. What does all this up and down price stuff actually mean for your wallet? Well, there are two sides to this coin, the reward and the risk. So here's the bottom line. Your money is now tied to how well that company does. Let's say you bought a share for $10. If the company does amazingly well, maybe that share is now worth $15. You've made money. That's the reward. But it works both ways. If the company really struggles and people don't want to own it anymore, that $10 share might drop down to $5. And that is the risk. And all of this leads us to what I think is the single most important way to think about the stock market. This is the core idea I really want you to take away from this whole explainer. I'm going to say it again because it's that important. The stock market is not gambling. It is business ownership. See, gambling is just betting on something totally random, like a roll of the dice. But the stock market, that's putting your money behind a real business with real people making real things, trying to succeed. And changing how you see it like that, it changes everything. It means you're not just betting on some random letters and numbers on a screen. No, you are actively choosing to invest in a company's future. Your success or your failure is directly linked to how well that actual business does out there in the real world. So when you boil it all down, that's really what it's about. And it kind of makes you look at the world a little differently, doesn't it? The question isn't just which stock is going to go up. The real question is something deeper. It's which businesses out there do you actually believe in? Which companies are building a future you want to be a part of? Now that's something to think about.